Welcome to the Passive Investing Show. I'm your host, Ashley Wilson, and unfortunately, Jay cannot join us today for the intro. He's recovering from the hurricane that just hit Sarasota. On today's episode, we are talking with Savannah from networthnurse.co. On this episode, we cover all about how she was able to go from being a nurse to growing a real estate enterprise by not only offering education to other nurses, but also to being able to create her own financial freedom through investing in multifamily. Without further ado, let's welcome Savannah to the show. Hi, Savannah. Welcome to the Passive Investing Show. We're so happy that you could join us.
Hey, yeah, thanks for having me on. I'm excited to be here.
Can you tell us a little bit about your background? We know that you're a nurse, but can you talk about how you went from just focusing on your nursing career to looking into passive investment opportunities and then starting a whole platform for nurses and offering different passive investing opportunities to those nurses?
Yeah, definitely. So I've always wanted to be a nurse, even from a young age. I wanted to go into the nursing profession. And so right out of college, I was pursuing my bachelor's degree in nursing up in Sacramento, graduated in 2013, worked in a couple different specialties, ended up going back to school to get my master's degree in nursing leadership and administration because I was just naturally drawn towards different process improvement projects and different leadership positions. And so went back, got that degree, and then beginning of 2020, had my second daughter, and it really put things into perspective. I had always had a goal of becoming a CNO, a chief nursing officer, climbing the corporate ladder within the healthcare operational system. And once I had my second daughter, I realized that how dependent my husband and I were on our W-2 income, that without going into work, I wasn't getting a paycheck. And so me having to hand over my baby at 3 months old to someone else so I could go back to work was an eye-opening experience. And so my husband and I started looking for different ways that we could grow our wealth, generate additional income, offset our W-2 income. And we stumbled upon real estate investing for obvious reasons. It's one of the best ways out there to grow wealth. And as we were researching it and educating ourselves on it, we realized that this was really our ticket out of the rat race, and then really went full force into educating ourselves, doing multifamily syndications, real estate syndications. So having investors invest alongside us. And I was able to leave my full-time job October of 2021 because of real estate. And so I do that part-time and then focus primarily on real estate investing.
Wow. So basically, over the course of just a year, you were able to scale your business to the point where you could leave and focus full time on family and your investments and your investing business. Did you have any investing experience coming into this? I mean, obviously, you didn't have real estate experience, but were you skilled in any other types of investments, or did you basically start learning from scratch come 2020?
Yeah, no, I wouldn't say I knew anything about investing. I mean, from the first time I got a job, I was putting 20% of my paycheck towards my retirement, which was told that that was a lot. Not a lot of other people were doing that, but I had always kind of been at the mindset of living below my means, putting myself in the best financial position possible. And so I was always diverting about 20% of my paycheck towards retirement, but I wasn't doing anything with it at all. I mean, I didn't know anything about it. It wasn't till I started learning about real estate investing and wanted to go and purchase our first home that talking to a lender, we own our primary residence here in Los Angeles, California, talking to him about what we wanted to do and him being like, well, do you know you have $100,000 worth of equity in your primary home? Like, use that to buy investment property. And I was thinking, like, what's equity in a home? Like, what is that? What do you mean? How can I tap into that to buy real estate? So no, it was really starting from scratch and educating ourselves through YouTube and podcasts and books.
And then how did you know to take all the knowledge you have and share it? What made you want to do that and share with other nurses your journey and help them with theirs?
Yeah. So So once we started learning about how powerful this was in our lives, I mean, how much additional income it was bringing in for us and how easy it was to do, especially for people who want to passively invest in syndications. Really, like your main responsibility is vetting out the operator, making it sure someone you trust that their business plan is sound. And if you feel comfortable with that, it's fairly easy to passively invest and get started in these investments. And so after learning about that, I created a social media platform, Net Worth Nurse, really just to share my journey and what I was doing, because podcasts were everything for me. And that is why I continue to guest on podcasts today, because it was when I was on maternity leave, walking around the park, listening to like 4 Bigger Pockets podcasts a day, learning everything I could. And it was me listening to people's stories from all different walks of life, all different backgrounds, all different experiences, and they were all making money on real estate. And for me, that was super motivating. It instilled confidence in me. And so that was a big piece of my experience, like jumping in, getting the comfort level to jump in. And so that's why I have become so passionate about sharing what I'm doing with nurses, especially because those are my people, but healthcare professionals and people in general.
That's fantastic. And so you created this platform, and I assume because the nurses were already in your network, it wasn't too difficult to kind of grow and scale the platform. At what point did you think about monetizing the platform, or basically being able to work with the people on the platform to help both you and them grow their net worth and their ability to kind of take the next step towards retirement?
Yeah, so definitely from the beginning. So when we started purchasing real estate, we realized we wanted to syndicate, right? So my husband and I didn't have a lot of money of our own to go out and buy these real estate deals, but we wanted to put in the efforts. We were learning, we were building the relationships, so we were willing to do all the sweat equity, right? And so syndications allow the perfect opportunity between general partners and operators and passive investors, people who want to passively invest and just put up their capital for the deal. And so we started doing these deals. And after talking to people and realizing the biggest barrier to people handing over money to one of your investments is trust. They need to be able to trust you. And for me, it was, okay, how can I build that trust? Getting on social media, getting in front of the camera, although it was very out of my comfort zone in the beginning, very much so. But getting out there and talking about what I'm doing in real estate, what kind of deals we're looking at, what kind of returns we're earning our investors, and just being super transparent with our entire journey has allowed a lot of healthcare professionals and nurses, especially, to follow and kind of learn about real estate investing and what it is we're doing and how they can get involved.
Fantastic. And so can you tell us a little bit about, like, what was your first investment? So you started researching this in 2020. How long did it take you to get to find that first deal? What did that first deal look like? How did you finance it? Were you working with passive investors at that point?
Yeah. So our first syndication deal, we had bought a couple single family homes, long-term rentals on our own. We pulled out a second mortgage on our primary and used that money as a couple down payments onto long-term rentals over in Atlanta, Georgia. So that was technically our first entry into the real estate game. But those were buy and hold long-term plays. We've actually since sold them off. But those were our first step into real estate. And then after we did that, we were like, okay, how can we do more? We're ready to scale our portfolio. How can we grow? And then that was when we started learning about syndications. And so when we started moving into the syndication space, that's when we really invested in a formal education coaching type program. So we spent $30,000 on a coaching program, because at this point we were going to be raising hundreds of thousands, millions of dollars of other people's money and putting it in investments. And for us, it was worth it to go through a very extensive program with people who have been doing this for years, just to make sure that we were doing everything right. And so that was a huge investment early on. And for us, I mean, coaching programs, I think, are beneficial for people for 2 reasons. One, they need the accountability of someone kind of encouraging them to keep taking steps. We didn't need that. My husband and I didn't really need the accountability. We were there. We're action takers. For us, it was the experience of someone looking over our shoulders at all of our underwriting, of how we were raising money, of how we were structuring our legal documents. Being able to show that to someone who has tons of experience was our reason for investing in that program. And so would highly recommend it for us, it really paid off. And then moving into that first deal, it was a very small deal. My husband and I were the sole GPs on, we have been on all of our deals so far. Our first one was a 12 unit for $1 million up in Oregon. We raised $250,000 and syndicated that out to 4 investors for that one.
And then what does your portfolio look like today? How have you since grown?
Yeah, so we've done 4 apartment complexes in the last couple of years. So 12, 24, 36, and 18. So total, we have 90 units. They are all up in Oregon. They're through the same broker. We have an amazing team up there. And then the returns that we're looking at, we do value add multifamily deals. So we're looking for multifamily properties, apartment complexes that are really mismanaged. That either their owner has owned it for a long time, they're letting a lot of different renovations kind of go outdated. And so we're going in there and adding value. So we're doing the renovations, sometimes we're really not even doing a lot of work, but rents are just so below market that we're going in there and raising rents. And so for us, our investors, we're usually looking at a 3 to a 6 year hold, and we're pretty much flipping the apartment building in that time. So in that length of time, 3 to 6 years, we're getting our investors 100% return on investment. So if they're investing $50,000 with us, we're getting them that $50,000 plus another $50,000 on top of that. Usually a 20% AAR, 7 to 9% cash on cash. And that's usually kind of what our investments are looking like.
That's great. So I know for apartment buildings and communities in that size range, that like 10 to 60 or 10 to 80 unit range, one of the biggest struggles is management. You basically, it's big enough that it's hard to bring in somebody that's accustomed to managing single family, but it's not big enough that you can have, that you can afford full-time leasing staff or maintenance staff. So what's your management strategy for your properties?
Yeah, property management is so important into the business plan with these deals, because they're out there day to day on the building, overseeing renovations and raising rents and dealing with the tenants. So our management has always been something that we really start looking at when we get a building under contract. So we're interviewing property management teams, seeing their experience, how close they are, what kind of teams they have, do they have contractors, because that's usually huge when you're doing renovations on these buildings. And making sure it's someone who has a good communication style with you, because we've had experiences where we've had to fire property management companies just because it's not the communication style is lacking and things are falling through the cracks. And so that's a big interview process that kind of takes place before we even go out and do due diligence. And then when we do due diligence on the property, we have that property manager actually come with us. And so they're meeting us with the building and touring all the units with us so they can really see what they're getting into before we officially purchase the building. So those are kind of some steps that we take with our property management company. And then my husband, he does all the asset management for our building. So he has regular conversations with these people, maybe once a week, maybe not more than that. It depends kind of what's going on. But he instills a lot of independence to these property managers. I mean, they have great experience up where we're at. But yeah, we've hit in a sweet spot with where we're at with them.
And what does the future look like in terms, not only in terms of the portfolio growth that you want to have, but in terms of your education platform for nurses?
Yeah, so Net Worth Nurse really was a capital raising platform that I was using really just to showcase myself and our business and what we're doing. And then as I started growing it, I had a lot of nurses and followers reach out to me asking for additional content. They wanted to understand how to underwrite and different concepts explained. And so that really motivated me to create blogs. I have a couple courses on there. I have a real estate investing course for people who want to do it themselves, also to do the passive route, a basic finance course for nurses who are struggling with some of those concepts. So there's a lot of free education on there. There's some paid education on there, and then also investment opportunities. If you can learn all about it, but then you can also invest directly with us as well.
And for your deals, what type of investors are you looking for? Do you mostly do 506B deals for non-accredited investors you have a relationship with, or 506C deals for accredited investors only? How do you typically structure your capital raises?
Yeah, so all of our capital raises up until this point have been a 506B. So they are open to unaccredited investors and accredited. We do happen to have an existing relationship with our investors before you can jump into our deal. So even on our website, there's kind of some steps you have to go through, just SEC guidelines and legalities. Um, Show that we need to have a relationship. And so there's ways that you can schedule a phone call. And it's better for us too to get to know our investors and their investing goals and kind of what they're looking at in terms of returns, just to make sure. I mean, $50,000 is a lot of money. So we just want to make sure that everyone's on the same page before they send that investment through. So we have an initial conversation with our investors. And then once everything seems good there, then they'll get access onto our portal where they'll have access to our past deals and they can kind of get a feel for what those look like. And then they'll have access to our future deals as well.
You know, I noticed on your website, which is networthnurse.co, that your goal, I believe it's to reach 1 million nurses worldwide. What efforts are you taking to achieve that goal and how are you measuring that goal?
Yeah. So what we've kind of done in the real estate space has moved us into the startup space and to growing a business into moving this into a startup. And so we've been working over the last few months collecting customer data. We're in an accelerator right now. It's kind of a program that helps startups raise capital. And we're actually pitching VCs right now for our startup idea. And it really kind of revolves around healthcare professionals and financial literacy. So they're kind of playing hand in hand with each other right now.
That's great. And do any of your investors, do you work with investors outside of the nursing space? I assume you probably wouldn't turn down investors, but do you make any active efforts to attract investors outside the nursing space or the healthcare space at this point, or is that something you're looking to start doing?
Yeah, no, we are open to all investors. You do not have to be a healthcare professional to invest in our deals. That's just kind of who I attract. I get a lot of women, I get a lot of nurses in our deals. But no, we are open to anyone who wants to invest in the type of deals that we're doing. Again, it's just really that conversation with each other before we get you in on it. But nope, we're open to everyone.
Can you walk us through either a past deal that you've done or a hypothetical deal? What does a typical deal look like for you? What type of debt are you bringing in? What percentage of the raise is debt versus equity? What's the minimum investment for your investors? You mentioned your timeline and returns a little bit, but if you go into a little bit more detail about what investors can expect in terms of timelines and return structures, that'd be great.
Yeah, definitely. So all of our deals have been structured fairly similar. So I'll just go over our last deal. It was a 36 unit up in Monmouth, Oregon. It's right outside the capital, Salem. It's a little college town. We have the 36 unit up there. So we got agency debt with this. We got a Fannie Mae loan. I think we were close to a 70% LTV on that. That was right before interest rates jumped. I want to say ours were at a 4.7 with that and 4.7% interest rate. And then for that one, it's a 5-year hold. So very exact returns pretty much that I emphasized earlier. So a 5-year hold with that. That owner had owned it for like 40, 50 years. And then he actually had passed away and then his wife passed away. And so his kids were selling off a lot of his real estate investments. And so it was a motivated seller. We rents really below market. So a lot of room to add value there. And a lot of the exterior building had been done. Although when we went to go do the due diligence on it, the roofs were in really, really bad shape. So the seller did have to replace all of the roofs before we ended up closing on it because we were told that they were brand new and they had warranties on them. So that's something that they had to fix before we closed. And then our investors are minimum investments $50,000. It was a 506B offering. So we have an amazing portal, InvestNext. They're amazing. I can't say enough great things about their team over there. And so on their investor portal, our investors get access to our deal. It's a webinar. It's like a 30-minute presentation where I talk about it. They have access to the PowerPoint, projected financials pro forma for the next 5 years. We show a projected P&L for the next 5 years. So we're very transparent with all our financials and we go through kind of market analysis and why we're investing in the market. So a very thorough presentation. If our investors like it through the portal, they can commit to it. Once they commit, they get all the legal legal documents. It's about 100 pages worth of legal docs. I give them about a week to go through that. Once they sign those, they do it all electronically, get saved on the portal, then they get access to the wire information. And then basically from there, they link their bank account and just wire the money directly over. And then that saves their place in the investment. And then usually the closing periods, it can be anywhere between 60, 90 days. And then once we close, we give our investors a heads up and we start giving out returns at the first or second quarter, depending on where it lands for that. This one, we did it at month 5. So it will be Q2. Actually, October 4th will be our first disbursement for that investment and everything. Then we do a quarterly presentation. So we'll do like a 5-minute video, PowerPoint explaining kind of what's going on with the property pictures. They get access to full quarterly financials. So complete access to that. And then the disbursement goes directly through the account into their bank account every 3 months. So that's kind of what our communication looks like. And then anything else that's going on with the property will throw up on the portal and people can see it electronically there. But we're very accessible to our investors. And so we're always open to additional phone calls and conversations as well.
So I'm assuming just because you started a few years ago, none of these deals have gone full cycle yet. Is that correct?
Correct.
Do you have any that are looking to sell or are still in the 3 to 6 hold period for all of them? Is that the game plan?
Yeah. So when we do our projections, we do very conservative. So, 3 to 5 year sell. If there's opportunities that we can refinance earlier, obviously with rates where they are right now, it's not what we're going to be doing with our buildings, but it's something that we're always watching and reassessing every quarter. We have not exited on any of our deals, but up to date on all of our projects, we have always over-delivered on projected returns for investors. So every single quarter, we've over-delivered up until this point. So we underwrite very conservatively, and we always have because we've bought all our buildings throughout the COVID pandemic. And so it was always just very unpredictable, don't really know, too much. And so we've always done our numbers very, very conservatively.
So we're going to switch now to another part of the show, which is where we ask all of our guests the same 3 questions. The first question is, what is a new thing that you have recently invested in or are currently researching?
So something that I have invested in recently is NFT. I got an NFT off Ryan Pineda. He's heavily involved in real estate investing. So I figure if I'm going to get my first NFT, I want it to be related to real estate somehow. So I'm kind of excited about that and just seeing what it does. I don't know too much about it. Honestly, it's a lot of re-education with a lot of the terms and minting and all the other stuff that these NFTs do. But yeah, that's something that I'm excited about and jumped into.
So the next question is, what current legislation or economic situation has the greatest threat on your investment or your investment strategy?
So I would say here, definitely the inflation is going to have different impacts on the economy that will roll over to real estate regardless. Right now, where we're at, inflation is allowing us to push rents in our multifamily. So we are collecting good returns on those because of what inflation has done for the economy with those buildings specifically. But the overflowing impact that it will have, 3 to 6 months now, that is really kind of unpredictable at this point, is just something that we're watching. We regularly attend webinars and different conferences and talk to different experts in the industry who are always looking at different stats and analysis and research. And that's kind of how we go about doing our business and where we're investing and what moves we're making and decisions that we make with our investments.
And then the last question is, what is the best piece of advice that you have ever received or heard that you can share with our audience?
Yeah, if you're interested in doing something that someone else has done, reach out and connect to them. There's a lot of people in the space that are more than happy to hop on conversations and ask questions. And I know even for me now moving into the startup world and talking to VCs and investors and hedge fund managers, like it's me just reaching out to people and asking for a coffee date or a lunch date or a conversation and learning about different things in that industry that I just have never encountered before. And so that's what I did in the real estate space. And it's been very effective, just reaching out to different people and asking for conversations, getting on podcasts and talking to amazing hosts who have great experience as well. So networking has been so instrumental in my success in the real estate world, and I can't recommend it enough.
So speaking of which, where is the best place that guests can reach you?
Yeah, definitely. So social media, that's really kind of my favorite place to hang out. So, and I'm on them all: Instagram, YouTube, LinkedIn, Facebook, TikTok, and Twitter. Instagram's my favorite. So if you're on there, that's kind of the best place to DM me or interact with me. And then my website, networthnurse.co, my email's on there. You can reach out and schedule a call if you're interested in investing with us. So more than happy to discuss anything real estate investing or nursing, more than happy to chat.
Well, we really like to thank you again, Savannah, for joining the Passive Investing Show. If you want to reach out to Savannah, make sure you check out her on all of the social media platforms that she just mentioned: Twitter, Instagram, Facebook. At networthnurse.co is Savannah's website. If you've enjoyed listening to this show, please make sure to like and subscribe on YouTube and on your favorite podcast platform. We hope this episode has helped continue having your wealth grow for you.